Hi everyone, welcome to another honeystocks.com stock market outlook for the month of October. Now, before I of course do the usual and walk you through some charts and flip over to my screen share, it's been commented quite a lot that I'm now starting to post more about the cryptocurrency space, Bitcoin, Ethereum, Cardano, etc. And many are asking why, because a lot of my work has traditionally been focused mainly in the equities market. Now, for those of you that aren't aware, I've actually been covering crypto probably for about 12 to 18 months now, with my clients and with my membership base, and it's only now that I've started to kind of get more proactive in the crypto space, because I see everything setting up beautifully just as I did last year. And I think it's very, very logical to me that I start to put the content out there, because at the end of the day, the crypto market is no different to the equities market. If there's a chart, then we can interpret the data, and this is what my work is based on. It's very data driven, very chart focused, so hopefully you get some value from it. If you do get some value from it, please do hit the like button. It lets me know that you like the content, and encourages me to do them more often. So let's flip over to the screen share. Let's see what the charts are telling us, and hopefully we can get some targets for Bitcoin. Now, before I get into this, as always, please pause the video, make sure you're comfortable with that. There's not any investment advice. Do your own due diligence and information, entertainment purposes only. Maybe to give myself a little bit of credibility, I'm working my way towards my CMT. Technical analysis is something that I'm very widely known for in professional circles, and I have this little small channel on YouTube that I like to contribute to, usually once a month or so. Consider subscribing. So where I really want to kind of start off is with seasonality. Now, this is Bitcoin seasonality dating back to 2014. Now, of course, there's like the equities market, there are months that you just need to be aware of, where we can get particularly nasty drawdowns. But as we can see here, I just want to draw your attention to Q4, October, November, December. We can see that Bitcoin traditionally does very, very well in Q4. So this is something that I'm factoring in and using with my data. We can see again Q4 traditionally for equities is generally pretty good. Set against that, we've got the consumer discretionary relative to consumer staples. For those of you that follow my work, you know that this is a big chart for me, and one of the charts that I use to gauge whether or not we have a healthy equities market. And if this ratio resolves higher, which I fully expect it to do, then I think we are setting up for quite a big Q4. Now, I know that there's many of you that will be saying, what about the economy? What about COVID? I get all that. I know that the doom mongers on CNBC, Bloomberg, and because of the September that we've just had, it's very, very normal to have the trepidation moving forward, but the charts don't lie to us. And if consumer discretionary is breaking out relative to staples, for me it's a healthy bullish environment. So this is one of the charts that I've been communicating to our clients over the last month. Ultimately, I think it's a dip that can currently be bought, and we'll see how it goes. But Bitcoin is an area of the market that I mentioned before that is very, very interesting to me. Now, for me, Bitcoin is a very, very straightforward Fibonacci chart. Now, there's some of you will be, saying to yourself, well, technical analysis is great, but it's voodoo, pseudoscience, whatever you want to call it. But we can see from the chart that these Fibonacci levels have a lot of merit. Now, I've been advocating buying dips, and provided that we've been holding above the 29,500 level, you can own the dips in Bitcoin now. I'm also using a 100-day simple moving average. I think we can see that with the chart, it has a lot of merit. And again, this is a chart that I've been communicating over the last couple of months to our clients and members. And ultimately it's holding firm at the moment. But the way that I'm looking at this with Bitcoin at the moment is I think we're setting up for a potential breakout here. So let me just bring this back up. And I think 70,000, if we can get a breakout here with a strong Q4 and seasonality kicking in, I think 70,000 is a very, very doable target. And I think there's an outside chance of the additional next Fibonacci level at 112,000 to be met by Q1 next year. Now, of course, with Bitcoin and the likes of Ethereum, etc., there's obviously volatility that has to be navigated here. Now, for those of you, again, that have followed my work, you'll know that I have a very technical approach in how I approach the markets, and I've made a big shift, I guess, with cryptocurrencies over the last 12 months. I used to be somebody that traded it, but now I'm actually becoming an investor, and I'm getting into the whole dollar cost averaging side of things, and I found it to be less stressful. I think, you know, buying on significant dips is a way that you can allocate to the space, but like everything, I think you have to be very, very comfortable with the understanding that, you know, you could ultimately lose everything. I don't advocate ever buying on leverage, especially with something like Bitcoin. But with Bitcoin, I think 70,000, I think this Fibonacci level is a very logical target and an outside chance of target 2 to be met by Q1 next year. But what I do want to draw your attention to also is what's setting up with Ethereum. Now, again, 100-day simple moving average. We know that the charts with Bitcoin and Ethereum kind of go hand in hand. There's a bit of a correlation there. But when I'm looking at charts, what I'm looking for is relative outperformance. Now, we can see that Ethereum is setting up here for a potential explosive move with a cup and handle pattern. But this is the chart that interests me more. This is the Ethereum chart, which essentially compares directly the chart with Bitcoin. And what the chart tells us is that when this chart is rising, it tells us that Ethereum is outperforming Bitcoin. So although they're both going up, Ethereum, you're going to get more alpha by owning Ethereum. And this has certainly been the case. Ethereum has been outperforming Bitcoin. But I think what we're seeing here is I think we're setting up for a base, and you can bet your bottom dollar that, you know, the institutional money, they look at charts like this, they hire people like me to break it down for them. And we're seeing a setup here with Ethereum relative to Bitcoin. So the way that I'm looking at this at the moment is that if Ethereum is going to break out on an absolute basis and a relative basis to Bitcoin, Ethereum is likely going to be a big performer. Now, of course, as always, price has to confirm the move. So you do need to get these breakouts in these ratios, and of course, with price. But I think we're potentially setting up here for a big move in Ethereum. So although we've got, you know, targets set for Bitcoin, I think Ethereum could be the one that really gets moving over the coming months, and hopefully those charts make a lot of sense. Now, we've also got financials breaking out now. You know, with interest rates, I think that's the word on the street, the hot topic of the moment. I think financials are breaking out. I think there are areas that you could potentially look to exploit with that. We've got Zion's Bancorp. Looks like it's setting up and breaking out here. We've got energy, oil futures, Again, I think we're setting up here for a bit of a breakout in oil futures. I think we've got natural gas, which has been a massive area of focus over the last 12 months. And those of you that follow my work, you all know that I don't use the magical hindsight indicator. I always laugh at whenever I see analysts etc. walking through the magical hindsight indicator. But I've been on top of charts. This is Antero Resources. This was provided to our clients and members back in December last year on this breakout. It's obviously been moving beautifully. It's set up quite a few times. I've been covering this chart for what feels like an eternity. But I think with Antero Resources, obviously with natural gas, really kicking on, looking like it's potentially could break out. It's interesting to me to observe the individual names like Antero Resources, where we have natural gas having a bit of a red day, but Antero Resources is putting in 3-4% upside moves. So that tells me that people want to own Antero Resources. I'm sure there's going to be a big jump up in earnings, and certainly I think the chart kind of speaks for itself at this point. And you also compare it with big tech, and you maybe look at something like Google, and Google, our upside objective was met a few weeks ago in Google, and it's for me, there are areas of the market that make sense to me at the moment, and big tech isn't one of them. I understand it's a pretty safe place to park your money, but if you're looking for outperformance and alpha, I'm not certain that you're going to find that in Google. I think the bulk of capital returns are not going to be coming from Google or Apple anytime soon. I think they're to be found in other areas of the market. So hopefully you've got some value from this, and if you have got some value from the analysis, hit the like button. Lets me know that you've stuck around to the end, that you've enjoyed it, and like I said, it encourages me to do more of them. And also feel free to go and check out our website at honeystocks.com, Honeystocks Charting. We provide technical charting research, trade ideas, halftime analysis. If you want to learn about technical analysis, I also include with our memberships our technical analysis program. So feel free to go and check out our website and how I got ahead of the 2020 crash. Again, no hindsight indicators used there. That was the actual analysis that was provided 2 weeks before the market crash last year. So yeah, lots of stuff on our website. Feel free to go and check it out, and maybe speak to you soon. Thanks.